ranging then. So maybe this move up was market open, this was volume push, and then market started to range. You see how you had volume, volume, then range, then volume, then kind of like range here, then volume and range. This is how price moves. Price will move with volume, and then there's going to be some sort of a range. Whenever there's a range, you will see some sort of confirmation within that range that, okay, we might start moving up now. So when price was ranging over here, this was your confirmation that, okay, we might start moving up. Some took the trade, some took a paper trade, some waited. Why did the top of the wicks not put you off, please? Oh, we didn't take a trade. This was just anticipating. Every example that we're going to do here, we're just anticipating trades, right? Step one to being profitable is to anticipate trades. When you can anticipate trades long enough, then you start executing on those trades because your confidence is up. Because now, so for example, I've been looking at US 30 for about a month now, right? I've been anticipating moves on US 30. And I think from June, I'm going to start executing on US 30. So, that's important. Why isn't first pullback after bottom of page a retest? What? Why isn't first pull back after bottom of page a retest? I don't understand. I don't understand what that question means. So maybe this was a retest here. Like we're just anticipating trades. We're just anticipating. So just to keep it simple, we're just seeing if price is going to go up or down just so that we know if we are right or wrong. All right. Let's go to the next example here. Okay. So what's happening at this point? What's the number one thing we see? We see prices ranging. Someone said dog shit. That's also good. But first of all, what we see is this candle, then we see this candle, and then we see this candle, right? So looking at these three candles, can't we see that a support has been formed? Yeah, support has been formed, right? So we have a support formed right over here. Support formed. And then we have some sort of a resistance forming over here too. So at this point, we cannot take a trade because, it's just very hard to take a trade, because we're in a small range. But also it's rejecting down here, so we need some confirmations. And now we have a candle going up into this level. It's at a minor resistance. We can't take a buy because it's at a minor resistance. We can't take a sell because candle is bullish, right? So now we have another candle looking like this. And now we have another candle looking like this. And then we have a candle closing above this area, right? So let's say, for example, now we have this range here. Let's say this range was 50 pips. Would this be a good opportunity to take a buy? Someone said, hell yeah, but if this range was 20 pips, then it would be very difficult to take a buy because someone would say, okay, hey, since we don't have prices to the left, so we don't know how big the range is. But hypothetically speaking, if this was a small range, we would anticipate price going up, but we wouldn't take a buy. If this was a bigger range, a 50 pip range, then someone could say, okay, well, this was a minor resistance, price respected here, price rejected. This candle closed above all the candles to the left, and we have ample range over here, so this could be a better opportunity to take a buy. Yeah, so if this was a bigger range, what time is it? We don't know what time is it. So every example which we're going to look at here, it's going to be a time when there's volume in the market, right? It could be New York Open, London Open, Asian Open. There's going to be volume in the market, right? So let's see here. So yeah, perfect. Next candle went up. This was perfect because this candle closed above the highs, and if you had a stop so far by now, I expect everybody to know where your stop loss is going to be. If you're looking for buys, it's going to be below a bullish candle. What some people do is they put the stop right at the wick. That's wrong. The reason why it's wrong is because the spread can take you out. If price comes down, the spread can take you out. So always have it a couple pips below the candle. Yes. So let's see what happens to the next candle here. And oh yeah, next continues to move up. So if you are trailing your stops, right? Let's say you had the stop down over here, then you moved your stop below the low of the candle because you're a smart trader and you're trailing your stops below the lows of the candles if you're in buys, and then since you're doing that, the next candle just shoots up and you're like, oh, perfect, I had a nice trade here which broke out. A dynamic entry possibly at bottom of range, maybe advanced entry. Yes. So far, if you are new, I don't expect you guys to use dynamic trades, dynamic risk, none of that. I expect everyone to use simple basic static risk. Krish said the right thing. Let the runner run. Perfect. So you put stops at break even. Once price came up here, you took profits because it's at resistance. We don't know. So whenever price reaches a resistance and you're in a trade, write this down, please. Whenever price reaches a resistance and we're in a trade, we don't know whether price is going to break it or not. We don't know that. So it's always good practice to secure profits. If you want to leave a runner, put a runner at break even, and if it continues on, that runner is going to be your golden trade. At the same time, if price reaches a support and you're in a sell, we don't know if it's going to break support or not. We need to secure profits. Can we place more risk there, or is it a bad idea reaching a resistance? It's a very bad idea reaching a resistance and taking a trade. Don't do that. We don't do that. If you are new, then you do that, but it's the best practice not to do that. We already talked about this. When price is moving up, we don't take buys. We wait for price to come down or create like a support or whatever, and then we take a buy. So how long is this webinar going to be, Raja? I think we're going to go for another hour. So if you want to leave, that's fine. It's going to be recorded anyway. I'm going to place it in the drive maybe by tonight or tomorrow morning. All right. Let's take a look at next example here. Awesome. So what's the bias here? When you look at this, what's the bias? Everyone's saying bearish, is saying downtrend, right? So when we have a downtrend, we wait for some sort of a resistance to be forming, right? So the first things first. First thing is we see prices dropping. So if price is dropping, you don't want to take a sell here. The number one mistake people make is when price is dropping, they take sells. You want some sort of like a retracement to happen, and then you want to take a sell. So first things first. First thing is we need to identify our zone. The first zone is going to be maybe right over here, right? Because price broke down, created a resistance, and then it went down. So whenever price is falling down, also write this down too. Whenever price is falling down, it's falling down from a resistance. So you need to mark a resistance. Whenever price is moving up, it's moving up from a support. So in the same way, we have a support right over here because price is moving up. From here, price is moving down, so we have a resistance right over here. So let's see what happens here next. Price is moving down. There's no trade. We don't know what's going to happen, right? So we're still waiting here. Now we have a candle forming like this, like a doji candle. There's no trade. Since what we've learned so far, there's no trade right now. Now we have a candle moving bullish, right? Now, can we take a buy or a sell? I don't think so. It's going to get pretty difficult because you have a range right over there. So we have to wait a little bit. Okay, we have a candle moving up now. So it moved up. So we were looking for a sell. So we're still waiting here a little bit. Price is still moving bullish. Now notice how price broke above this area and it came up to this previous support. right? It came up to this previous support, it created a low. Also, another thing to note is whenever price is trending down, it will create a low. Whenever a low is formed, there's going to be a retracement, and then there's going to be a very high probability that price will retest that low. Whenever price